Hey, everyone here at the Investing Stuff You Should Know podcast. We talk about things about money raising, syndications, funds, and all the ancillary influencing factors in that. We have a really interesting and special guest with us today, Johan. He is actually part of a mastermind that I'm part of. He's actually been part of the group for a while, and I just had not tapped into this knowledgeable and smart dude, really. And I'm really grateful that he's joining us today. And he's really got a wonderful perspective on geopolitics, the flow of money, trade, the banking system, technology, and just a lot of different interesting things. So, Johan, thanks for stepping in here with us on the Investing Stuff You Know podcast today.
Well, thank you very much, Johnny, for having me.
Absolutely, man. Yeah. So, I've been reading some of Johann's commentary and insights, and I've heard him talk on other places before. So, like I said, we're really excited to have you. So, Johan, you gave me a little outline, but just to jump right into the kind of the meat for the audience here. You gave me a fascinating structure, and actually, before I step into that, give us a minute bio of what you've done and all the different things you've kind of worked on in your life. You have technology, startups, large companies, small companies. Give us a little bit of a background so people know who we're talking to.
Yeah, gosh, it's I think I've been fortunate to have a pretty diverse, or you could say cursed to have a very diverse background. I've done everything from running hotels and restaurants and family businesses and automotive businesses. Peeling potatoes, scrubbing toilets, swapping engines in and out, shipping cars around the world.
I think that gives the depth of your insights, Johan. I really truly believe it does. Yeah.
And so that also gave me exposure to a lot of older people. I started working in the family businesses since I was just around 5 years old. So I would always listen and learn from everyone, and was fascinated by the things people would learn. But I didn't appreciate doing a lot of manual labor. And I was always fascinated by technology. So I started teaching myself to program in junior high school, got into the world of telecom, mobile applications in the early mid 90s with some pretty big companies you may have heard of. And then from there, got involved. What I noticed was there's all this data, which is really interesting. So I started building up an e-commerce startup, and I started looking at consumer data and how I could use that to recommend products to people. And this is in the 90s, so you probably had seen this technology used in your everyday life now, but then building things like advertising technology, and then working with some Fortune 500s and startups, ranging from like companies like GetJar, where we were building the largest cross-platform app store in the world. We launched it was in the top 400 websites in the world, called Music Plus TV, which became a company called Blaze, where we were doing a lot of innovation in the music space and disruption there. Worked inside of Macy's and Bloomingdale's, really helping to drive a lot of innovations, launch their mobile initiatives, omni-channel initiatives that help move them to, among the top in the digital IQ index among peers. And we won.
So like a lot of fascinating stuff here, folks. I mean, he's got a deep background. So pivoting back to what I kind of jumped out of the gate with a little too soon was this cool kind of this triangle, and you laid out for me, Johan, how you kind of think of things. And so bear with me, folks, the audience, as we talk about this. So he's got one corner of the triangle is ingenuity, innovations, tech, and then this triangle is attached. And then we have kind of one of the other quadrants, or the other vertices of the triangle. We have commerce and business, and then we have another one that's called culture and community, and they're all tied together. And of course, when one gets stronger, and of course it pulls the triangle out of equilibrium, but they're all trying to kind of stay in equilibrium. So let's start there as kind of the framework for a discussion, Johan. What is grabbing your attention right now on the commerce and the business side? We know interest rates are spiking, energy rates, you got war, and lots of different things. Give us some things that we've even talked about before that is grabbing your attention.
Yes, I mean, I think kind of reframe that. It's that triangle. It's really trying to recognize the constant forces of change, right, in the world. And recognizing that there's, if you think about it, there's always a push and pull. One is influencing the other. There's opportunities for creation. There's also destruction, which happens in that. So I think as we look at things broadly, right, we have a number of different things going on in the world right now. We were very lucky, you could say, for for the last 10, 20 years or so, where we've had probably the most stable interest rate environment in the US. We were kind of in this Goldilocks zone. But if you look at the time periods before that, where we would see much higher interest rates or interest rates fluctuations, that would definitely change a lot of things. And I think that when you boil it down to really basic things, right? The US economy and as the US model was adopted by more and more countries that were trying to grow as the US had been for, you could say the greater part of the last century.
Yes.
The US on one side, you could say, yes, there was a lot of innovation that helped the US grow, right? Then you could say, yes, as in our culture, our work ethic and our entrepreneurial zeal helped us to grow. And I think those are kind of two elements of that triangle. I think, then if we look at, the world of commerce and business, so that third triangle, yes, you could say that competition, free markets were big factors, but one thing which is often overlooked by people is how large of a role debt played in helping to grow the US economy.
Yeah.
And I think that as we look at this changing rate environment, because of this Goldilocks zone that we were in, there were a lot of companies that were able to continue to borrow and kind of sustain themselves for quite a bit of time. Now, as we face kind of a return to what you could say the historical norms, where in terms of where interest rates have gone, what this means is things like borrowing costs and raising capital suddenly become far more difficult. So if you have to service debt, right, and you've been carrying this debt load, what happens to your company? What happens to your profit margins? What happens to the amount of money that you now have to take out of your R&D or your marketing or your business development activities or your production? That's going to have multiple implications from the quality of your products, the amount of employees that you can hire, or the number of employees you have to let go. So there's a number of implications that come along with this, and you can look at there's countries like Japan which have kind of taken a very different approach, where they're kind of letting their currency going to free fall, and many people look at that as a negative. Well, is it really a negative? Because they're keeping the costs of servicing the debt low because they're trying to protect the basically the yield curve, whereas the US is basically allowing interest rates to rise. We're seeing the yield curve inverting. We're seeing which has historically been a precursor to recession.
Yes.
Not 100% of the time, but the vast majority of the time. And what this means is that the cost of servicing debt is now going up. So you can't have the same debt fueled growth that we've had over the last few years that was driving a lot of things. So there's a lot of implications and changes here. And I think the other thing is, I've had these kind of peculiar conversations with some folks who are very defensive of U.S. government economic and fiscal policies and policies.
What do you think the basis for that kind of defensive posturing is? I
think one is that I think people we have shifted culturally from a society where if you look at kind of the principles of the founding fathers in the United States, it was to be more pragmatic and objective. Was kind of we tried to embody that, and it was something that used to exist. But I feel that now in the US, people are more emotionally driven, but they don't want to take the time to read. They don't want to take the time to understand the details. This is something I see, which I feel is a huge factor in the destruction, or should I call it the implosion, or I call it, it's like a cancer within US companies, where you've seen really great companies and you're like, well, what happened? These guys were world leaders. I can tell you one factor I've seen in a lot of companies that have done very poorly or that are failing, or startups that have gone down, and it comes down to people don't want to pay attention to the details. They want everything in super short format, bite-sized chunks. They want give me the answer now, and so I can make a decision quickly. Well, yes, you want to move quickly, but you also need to embrace a certain degree of pragmatism and patience, because what I've seen is I've been in meetings at multi-billion-dollar companies where I'm talking to the C-levels and they're asking me questions and they're like, no, can you just get to the point? And I'm like, well, I can give you the point. And this is one thing that I think we've lost in American culture from at least from the Western, European, or I should say just the European influences that we used to have, which is that we used to pay attention to details, which is kind of born out of our apprenticeship models that existed within, the culture of Europe for for hundreds of years.
Yes.
Everyone wants to rush to an answer. Okay, I can give you an answer. I can give you a bullet point. But if you don't understand it, what's behind that, how can you really make an effective decision? So you see a lot of very poor decision making being made. And
I love your point, Johan, about the emotional kind of just yes, we can go into some of the possible causal relationships, but also I definitely resonate with that. You see much less thinking, much less deep thinking, and it's at least, like you said, a lot of poor decisions, and it's a very very emotional, social media type of analysis, which is not really analysis. It's just a superficial type of quick snap things, and there's really no there's no complex structure and understanding of the reasons behind it.
well, like one big thing, like I could tell you, like, I mean, I spent a lot of my youth, I'd save my money, go back to Europe. And then when I got, a little older, I had opportunities to go study in Asia. And I would say in East Asia, at least, and in, parts of Western Europe, and even Eastern Europe, Central Europe, you see that people can separate a topic from who they are as an individual. I think this is something that Americans that Americans struggle with in a very big way, which is whatever things, thoughts, ideas, beliefs that they develop,
Yes.
they internalize those, and they can't separate, this is my value system from this is just an idea or a concept or a topic.
Yeah, I would say that's gotten worse. What do you think that is? What do you
Yes.
what do you think we've actually got worse there?
Yeah, I think there's a number of factors. We could spend all day going into it.
Sure.
I think part of it is that we've placed so much emphasis on feelings, and we've essentially removed, you could say, more of the stoic logical elements from our teaching structures.
Yeah.
Like I was having a conversation with a group of teachers who were leaving the profession, and here at the Los Angeles Unified School District, and they said that one of the reasons that they decided to punch out is that they were literally being told, these new teaching doctrines were basically saying, like, if a student gets out of hand in class and starts really misbehaving, you can't discipline them. You can't, start to demand that they have some emotional control. Instead, you have to, as the teacher, the kid does something wrong in the classroom or disruptive in the classroom, you have to apologize to the child. You have to say, I'm sorry, what did I do to make you feel this way? And while it's important that we should be cognizant of feelings and we should be aware and considerate, the complete removal of the aspects, these kind of stoic elements, which once
the imbalance, right? I mean, like all this stuff is like, even like the initial thing we started out with, like this triangle, like you said, push, pull, tension, and compression. It's all in balance, right? There's always a balance of those kind of elements of everything in life. Really, there's a balance. So if you completely remove one side of that, systems collapse.
Absolutely,
things don't work when you have that type of approach.
And so that's kind of like going back to that push-pull factor, right? So we had the pendulum has swung so far to one side of, well, your feelings are all that matter. Well, okay, yes, feelings are important, and what we feel drives a lot of our decision making, but without that balance of some pragmatism, without the ability to separate out, hey, is what I'm thinking, is this who I am at the core, or is this just some idea? And people can't really understand that they've been fed a lot of ideas. They've been fed a lot of beliefs and lies, because no one takes time to check anything. Nobody takes time to validate anything. For example,
we'll probably we'll put a pin in that one, just to kind of keep it on our original framework here. So awesome, like kind of explanations, and like I said, we can keep drilling deep into those, but give people kind of a sense of some of the things you've seen. So we talked about kind of the commerce and business, and really, like you said, kind of your good insight about there's been really cheap money for a long time. American business have flourished kind of under that. That's changing. And then of course, and then we talked, obviously we've touched on some culture and community. What do you see, I guess, we'll probably circle back to the commerce and business, because that's kind of what we talk about more of, but what do you see that's, I guess, on the more encouraging side, on the ingenuity and the innovation side there, Johan?
Well, gosh, I think,
or even just the fundamental change, like obviously blockchain and crypto, it's all the rage and some of these things. We know it's going to be changed. Those things are pretty going to stay a big deal.
Well, yeah, I think, okay, so I think there's a variety of changes. So, again, like as we talked about, now one thing I should mention about that triangle is there's one last piece at the middle, which is what I would call politics and bureaucracy. So just once you start to understand how things are interacting with each other, politicians can show up and blow that whole system up that you just started to understand apart, and now it gets all rebuilt. And so one example of this is, so for example, you could say around data, right, and user data. So there was, I remember working, creating tech startups like long ago, and people were freaking out about, oh, what are you going to do with my user data? People were scared. I still remember the days when I was building e-commerce stuff, and people were like, oh, I don't want to put my credit card online. I'm so scared of this. To what happened, I would say post 2005-ish, 2006-ish, it became, oh, well, Google has all my data, Facebook has all my data, that's fine, I don't mind. So there was this kind of change that really took hold around 2012, 13. I think by 2016, everyone was just kind of like, oh, that's fine. But then we had this political shift where suddenly, hey, you can't, like the European Union was really spearheading a lot of this around, you can't, use the data, you have to get permission, you need to show the consumers all this stuff. And so we relied on this technology called cookies to track people. So, for those who aren't familiar with cookies, it's just a little bit of, a little snippet of code which gets dropped into your browser when you visit a website. And then there's ways to interact with that cookie when you visit other sites, and people can tell from your history where you went, what you were doing. Long story short. So that's basically a cookie. But now there's this trend which we call the cookie is crumbling, because as the US has actually started to implement certain degrees of privacy for consumer and business uses, granted, the flip side of that is the government is basically, thanks to Bush and then Obama, they basically allowed certain legislation and changes to go through, which basically said the government can look into anything, all of your data, it's all there on these servers. And the government has total access to it, the NSA, et cetera, et cetera. But most people forgot about that. Nobody paid attention to those details.
That we don't talk about those. Yeah, we don't talk about those things, but that's still there too. But anyway, so there's putting the blinders in that piece and just saying, okay,
so
at least Macy's, they can't have everything about me, legally, at least.
So what happened was, like, a lot of this data was, it was obviously like being sold and reused, but it provided a certain value to businesses in that they could really optimize a lot of things, ranging from, how do they target their ads to what products do they recommend to you, what kinds of services they provide to you. So this provided a lot of savings to businesses, which before would have to get focus groups and do market research and things in a very manual way, which was very expensive.
Right.
So this is all like coming apart and it's being recreated. So this is creating some new opportunities for people who are like, how are you doing with identity management, rights management? And there were some really cool startups that, whenever anyone in the tech world pitches anything and says, we're the first, 99% of the time, I'm like not shaking my head. I'm like, no, you're not the first. Like, look, it was just other people came on with it. So there was startups that were doing this. I remember back in over the last 20 years, I can name several, I won't go into detail, but in short, they would give you the rights to hold your data and release it to different institutions that provide them. So that way you had more control. So there's things along those lines which had existed. So there's going to be a resurgence of those. So look for these startups which came in too early, as the cookie was everywhere and just kind of omnipresent, to now with the cookie being crumbling and people demanding more rights. So this is creating some new opportunities in terms of data management, but it also is going to blind a lot of businesses. It's going to make it more difficult for them to understand a lot of things that are going on, which is going to impair some of their decision-making processes. The other thing is they're going to have to spend more money to try to understand, which means that's also going to impact profit margins. It's going to impact their product development, because they don't have the same insights that they had. It's going to mean that they're going to probably in some areas raise prices, and so that's just like on a tech front, right? But I mean, when we talk about rising prices, I think there's a much bigger picture here when we look at those fiscal and economic policies, right, and Fed policies, and not just in the U.S. but globally, right? I mean, for most countries, where people, for example, right now are saying, hey, the dollar is stronger. Isn't that so great? The US dollar is strong. It sounds good. It makes for great political spin. But it's devastating for the US businesses that are exporting, because now the cost of American-made goods are now significantly higher. I had this, like I was saying, like earlier, I was alluding to some of these conversations. I literally had I literally just like spent an hour and a half talking with a college friend who's very like pro all these policies that have been, you know, pushed over the last 2 years.
Yeah.
And he's like, oh, but I can go to Europe and I can buy more stuff. I'm like, well, yeah, you're ivory tower, you know, and you're kind of like, you know, you make a substantial sum of money every year, so you don't have to really worry about these things. You're pretty much retired. And so for
Insulated,
you, it
retired
sounds
for these types from these effects, right? But then if you're
yeah,
a factory worker making some machinery in Iowa, all of a
yeah.
sudden the cost of, you know, American, you know, tractor is, you know, 20-30% more. And like, they're not gonna, like, why would you buy that? Like, I'm gonna source it from Europe, Germany,
Well,
China, something else. Yeah.
and so sourcing also raises some other questions, some other interesting factors in that equation too, which is, um, you know, what a lot of people, you know, I'd say most people haven't paid attention to. It's gotten little bits of mentions here and there, which is, you know, you've heard the term supply chain mentioned, but what does that really mean? What does supply chain really mean? Well, I lived in China, and I worked, you know, I began working with China back in like 2003, and I opened up our first offices there in like, I was like 2007, 8, in Guangzhou, and at that time, you know, that region, there was an area called Dongguan, which was very famous for a lot of companies going and setting up factories, was booming. But I could tell you around like 2013, when, you know, there was some shifts in government policies among the leadership.
The Chinese side, right?
Yes, in China.
Yes. Mhm.
But what happened was I could start seeing, you know, and I had actually made I was in a conference in Tokyo, you know, back in 2003 with a bunch of top university academics, professors, and researchers from both China and Japan, and they were debating, is China replicating what Japan did? And a lot of people were saying, no, China is totally different. And I was like, no, they're pulling from the same playbook: real estate, debt-driven growth. You know, they were benefiting from a large population with cheap labor. You know, so you saw, like, you know, after World War II, a lot of U.S. companies went to Japan. You know, there was a lot of made in Japan. But then what happened? As the Japanese economy, you know, evolved, labor costs went up. As the population shrinks, guess what? Labor costs go up even more. They shifted to South Korea. They shifted to Taiwan, Hong Kong. You know, like, you know, other parts of other areas, and then it went to China, and China played much of the same playbook. But the problem is that you have an aging population in China. You know, you have you know, higher costs. The main point is that companies were already just starting to trickle out. And I said, you know what, this is going to accelerate under the new leadership, but also with these other factors in society, which are going to drive up labor costs in China even more. So companies were already moving out of China. Dongguan started to empty out, you know, slowly. But COVID really accelerated that as we saw
Yes.
the ports got locked down, as whole cities got locked down, factories. So your whole production had been concentrated in China. China did an amazing job at really creating, you know, a place where you could vertically integrate, you know, or you had basically everything you needed, you know, available to you with great logistics, great, you know, their infrastructure is fantastic. So you could source, you know, you could produce everything all in one place. But that basically subsidized low cost goods for the last, you know, I would say 15 years, 18 years in the US.
For the US,
So
worldwide, yeah, I guess developed
yeah,
world, yeah, yeah.
yeah, but US being the largest consumer,
Sure.
largest, you know, in terms of those products, whether they were made by Chinese companies or they were US companies that went over there and started manufacturing and then brought over here. So we're also seeing, not only is it, you know, the money printing, right? So we can say, like, the value of the dollar. Yes, they say they say that the dollar is strong, but that's misleading, because the reality is your dollar gets less, you know, because asset prices, the value of the dollar, the true value has gone down relative to other currencies. It's strong, but the true value has gone down. You look at any asset, you look at anything you try to.
Are you basically making the claim, Johan, right now that the entire world has just inflated their money supply? I mean, that's more or less what you're saying, right? I mean,
Most of it,
it's
yeah.
all not good, but like,
Yeah,
yes, relative to
most
that.
countries. Yeah, but what has helped, one of the things is we've been building this massive debt wave. It's probably the biggest debt wave that we're witness to in human history. It's beyond proportion of what we've had in the previous debt waves, which have led to phenomenal, like, economic disruptions and recessions, you know, or you could even say depressions. We're at an unprecedented level globally. But, you know, what was helping to kind of hide that for some time, what was helping to mask a lot of what was going on was China's production costs. Because those were so low and products and things could be produced there, it helped to serve as a deflationary force, in the sense is like, oh, okay, cheap manufactured goods. Well, guess what? Now with costs rising in China for the various reasons I mentioned, but also, as companies shift out of China at an accelerated rate over the last 3 years because of the COVID experience, the companies don't want to concentrate in everything in China. So you can't get the same economies of scale. So they have to build in redundancies. So now they're building in redundancies. So they're having, whereas they may have had just in time, so they manufacture something to have it just in time and that helped their cash flow. Now they're having to invest, they're having to stock up inventory. They're having to have multiple production facilities in different parts of the world. So, so these redundancies help protect, again, insulate them from some of the supply chain issues, but these are going to further increase costs. And then you have other policies, like, say, for example, in the US, everyone talks about this minimum wage thing. Well, okay, it sounds good. It's great political speak. And you can have all your different reasons why it's good or bad. But what I could tell you from an economic standpoint, right, what really matters is not the minimum wage, but what's your cost of living, right? So if you look at parts of the US where you have lower costs, you could have lower minimum wages. Like, for example, in California, like when I lived in Silicon Valley, a lot of people would say, oh, see, our policies are so great. We have some of the highest wages in the country and blah, 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 blah. But okay, what's your cost of living? How far does your dollar go? Great, you make 6 figures, but you can barely afford to live in a loft or, like a studio apartment, right? Whereas I could take half of that. I could earn, 50, 60,000, and I could have a nice home somewhere, else in the United States, as more people have found out over the last few years. And my cost of living for just about everything is a fraction of what it is for a number of different reasons. I mean, you could talk about taxes, but let's just focus on the payroll portion of this, right? The wage portion. Well, yeah, it sounds great. Yeah, California, we raised the minimum wages. Okay, they just passed something where like restaurants of a certain size have to have, I think they're pushing the wage above, it's over $20 now.
That's incredible.
And so sounds great, and it buys you votes from a political standpoint. Yes, you bought some votes now, but what have you really done? You've increased the prices of production. Okay, so who does that impact the most? Does it really help the people who you're saying it's helping? No, because the wealthier people, anyone who's earning a decent, a pretty substantial income, that doesn't really hurt them much. They're like, oh, I pay, $1 more for a burger. You remember the dollar menu at McDonald's? It doesn't exist anymore. It disappeared over COVID, right?
Yes.
Why? Because the cost of food, everything, but also the labor costs. So, okay, if someone is earning a low wage and now you've raised the minimum wage, so everyone who's earning a minimum wage, which represents a larger portion of the population, you've now increased the labor, the cost of goods, and the cost of production, which then increases the cost of goods. Now, there in the beginning, I could say, like, I shouldn't say the beginning, but I would say earlier in the pandemic, companies were trying not to pass on these costs to customers. They were hoping, okay, we don't want to risk losing market share. We don't want to, risk losing customers. We don't want them to think we're being greedy at a time that so many people are. There's a lot of potential reasons why people in management decided to do that. But now they're at the point where, like, we can't absorb this anymore. And we have Wall Street pushing, coming down on us for maintaining earnings. And there are other pressures as well. We got to keep running our business, and we can't afford to sell at this cost, or we go out of business, or we're losing on a number of other areas. So those costs are also being passed on to consumers, which I think is another important factor. So it's not just about printing more money, which is a huge factor, yes, but there are these other forces at play which are going to further accelerate a lot of these issues. Now, that being said, there are some indications that we could see elements of some stagflation emerging, where as people start to see prices reach a certain point that are just not sustainable, people can't afford. So what do? They cut back, right? So then they start to cut back, and then what happens is people start, companies are like, oh my gosh, we're not selling. Okay, we're going to have to find a way to lower prices. So
I know,
Um,
slash jobs, slash the job that the people are barely hanging on to, and then
yeah,
lower prices
or
because you can, yeah,
that same bag of M&Ms you buy, it just has fewer M&Ms in it, right?
yeah,
Yeah.
yeah,
So they kind of hide these things in there. And what happens is that starts to create a cycle where people start holding back because they start seeing prices drop. They go, oh, well, maybe if I wait a little bit longer, or the price will go down more. Okay. And there's fears recession-wise, so people hold on their money even more. And so this kind of creates a downward spiral. And so you'll start to see aspects of kind of like, there's some deflationary elements which feed into this.
So,
But then what
so
happens is companies start laying
where does
people
this
off.
go? Where does this go, Johan? So like, I guess there's a, so we talked about, obviously we talked about some, I guess more of the negative things, the serious things, that are happening around the world. We see some different things. What are some like things that you recommend to do? Like, oh, like, buy diamonds, get into real estate. We're all screwed. Like, what's a few like conclusions or things you're doing yourself? Like, what are you doing yourself here to thrive and survive as we turn this next chapter or just step into this next phase of this environment, as we kind of wrap up our discussion
Yeah.
here?
So as I look at things, I feel like, how can I put it? So to me, one of the big trends that stood out to me that I don't think was getting enough attention is, for example, in the agricultural space.
Yes.
So there were certain commodities which they overplanted, like soybeans and whatnot, but that's because of a bunch of other factors. But by and large, you're looking at we're in a rising food cost environment. So I was recommending to people I have a small, like, just group, like a little Facebook group where I share my insights
Yeah.
with people that I was trying to help during the whole COVID thing, and they did pretty well based on those insights. And one of the areas I strongly recommended was around commodities and agriculture, because the reality is, you've heard like people like Ray Dalio, he used to use this term, cash is trash, although with a stronger dollar, there's been some changing of the tune. But by and large, the reality is that we were raised from, I think, when I was growing up, at least, in generations preceding me, you were raised with this mentality of you save money, right? You save
Yes.
your money and then you invest it. The economic reality, the way the whole financial system was recreated once we went off the gold standard, and there were other forces. We could talk for days about this, but the long story short is savers were punished. So
Yes.
the end of the day is, yes, we're in a stronger dollar environment, but the value of your dollar overall is continually declining. So you're able to buy less. Now there's going to be some corrections, as I said, like, things hit a point, consumer demand drops, so prices will kind of drop down a little bit, but they're still going to be relatively higher. So your dollar overall buys less this year than it did last year and the year before, and that overall trend is going to. Yeah.
Could I conclude just to that, to kind of that statement, or the statements there, Johan, that in general, the average American, the average family needs to learn how to invest. Is that kind of where you're going with that?
Yes, I think they need
Yes,
to invest.
we're not talking like, penny stocks,
Yes.
but I mean like smart things. But they need to invest, because the saving, you're going to get wiped out if you think you're going to save yourself to retirement or
Yeah,
success.
you're dead. But here's the thing: it's like you have to be even more careful about where you invest now than ever before,
Okay,
because
great point.
we're seeing entire asset classes just get eviscerated, right? A lot of people who made a lot of money in the stock market, for example, investing in tech stocks over the last 2 years, are just getting taken to town.
Yeah.
So I'm actually working on how do we bring alternative asset classes to market. Alternative asset classes, like ranging from, like, how do you invest in, like, Japanese Kobe beef, right? Hey, like, why would I care about Kobe? Well, that is a very niche market where actually you have a small audience of people who make very good money who enjoy that type of product, right? Or you look at things like art. Art has been a great asset class. Why? Because there's a certain group of people with high level expendable incomes who invest in that asset class. You look at things like, say, whiskey, right, or tequila. Have you looked at the price of a bottle of tequila? Like, it's just like, if you had bought, you went to Costco and you bought a couple bottles of, Don Julio 1942,
Yeah,
just 2 years ago.
let it sit in
Yeah.
the closet. Forgot about it, and then we got it
Yeah.
out, and you'd be like, "Oh my
So it's
god,
one
I
thing.
invested."
Yeah. So it's one thing to, like, buy those things and hold them physically, but I think that the challenge is it's not always easy, especially as people are having smaller and smaller homes. So I think getting exposure to other asset classes is one of the things I'm working on doing, and one of the plans that we have behind the fund that I'm working to create. So things like, for example, farmland, right? But not any farmland. Like, for example, if you bought farmland in California in some areas, well, guess what? Gavin Newsom pushed executive orders, which basically told them you have to turn off the faucet. So all these crops are dead. But if you can find, for example, farmland in an area which has access to reliable water, well,
Yes.
the value in that is going to go great. But plus, what most people aren't aware of is when you talk about agricultural land, there are certain tax benefits as well. You're not taxed at the same, your property tax rates are not at the same level as they are for, say, a commercial or residential property. So that's an asset class that is also really interesting, that I think people can really look into. You hear a lot of people talk about renewable energy. I think you need to be very, very careful about the different technologies and the sources. So everyone's run to lithium. Lithium did great. I recommended that like 4 years ago. I was like, hey, lithium. And so anyone who followed that, but that party's, kind of calmed down a bit, where I think there's going to be some opportunities in there, because as tech in general is getting eviscerated, it's dragging down a lot of these. So I think there's going to be a really interesting buy opportunity around a lot of these commodities that are going to be, really the inputs, right? The raw materials that go into the production of renewables. With the amount of money that both you're seeing the European Union and the US government basically dumping in to supporting renewable energies, I think that there's going to be some great opportunities. So I'd be on the lookout for which companies actually have really viable technologies, and not what's hot right now, but what's going to be really the technology a year and a half, 2 years, 3 years from now. Like there's a company in Japan, a friend of mine from university, we're in discussions right now about some really interesting projects, but they have, for example, developed a carbon-based battery. It's basically, the battery is made of almost all organic materials, as an example, right?
Amazing.
So it's carbon-based. So, if you think of batteries, they're full of like all kinds of nasty and toxic chemicals and solutions and materials, which are hard to recycle, difficult to handle, and can be toxic. And if they ever get out, like you ever empty out a car battery and watch what it does, dump it out on the floor.
If you get it on splash it on your jacket or your clothes, and you look at it like 3 days later, it's like, wow, I just literally just destroyed everything about that jacket.
Right. So I think it's about being very, very selective. And I think that you can't just like go to your usual, investment advisor and just be like, hey, put me somewhere, because the reality is a lot of these guys are not, they're all kind of following the same playbook I haven't really run into too many that really take time to understand and read and really analyze and look.
You really feel like the fundamentals of our environment, our economic environment, let's just keep the focus there, have changed so radically, Johan, that like we don't just kind of need to be doing something a little different. We need to we need to be doing something radically different, of a new set of facts.
Yeah, I mean, like for example, we just mentioned things like real estate, which by and large traditionally has been a pretty good safeguard. I don't think jumping into real estate right this moment is a good idea. I think that the opportunity there is going to emerge in about a year from now to 2 years from now, is when we're going to see some really great buying opportunities. So I wouldn't be rushing into real estate in this environment, because as the interest rates, this is the one area I would say you want to have some cash on the sidelines for. Is that as the rising interest rate prices people out of the market, because basically people can't afford the payments, right? You talk about like what's happened over just the last year, people who could get in on a mortgage, a 30-year, that there maybe would have been spending around $2,000 a month. That mortgage is now, depending on their qualifications, they're now having to pay somewhere between maybe $2,500 to $2,800 a month. Well, now they're priced out. So there's a lot of people, and this also affects, different institutions which invest in real estate as well. They were buying tons of real estate. This is one thing people weren't, a lot of people weren't paying attention to. Really cheap, because money was cheap. So now what's going to happen is those who have cash, there's going to be less competition for, a variety of really good deals in the real estate market. I think, rents, the challenge is that a lot of people can't buy, so they're rushing into rentals, right? So people have rent rates have gone up, but rental properties types of residential type of stuff, that went up, they kind of went up together. So the cap rates aren't quite there at this moment, but a year and a half, about a year and a half from now, I think we're going to see some really great opportunities where the people are going to get into trouble. But the one risk I would be paying attention to is that if economic if the overall economy takes as deep of a dive as it looks like it probably, that is possible. It is, in the cards. There's a pretty fair chance of that.
Yeah.
And a lot of people get laid off. We could end up in an environment where it's like what we went through with COVID, maybe, with the current administration that's in place, where guess what? If you're a property owner and you're renting out, the government's basically going to say, well, sorry, those people get to live there for free and you can't kick them out. So there's that risk element that you need to factor in and be prepared for. But I think by and large, there's going to be some fire sale opportunities. And if you have, some cash on the table, you're going to have access to deals that other people won't have access to because they can't afford it, because they can't borrow the money. So the more cash that you have, that you can do an all cash deal, or you can syndicate a deal with all cash, I think it's going to be a really exciting time. And these kind of opportunities tend to come around every like 10 to 20 years, where we're going to see some really, really, big hits. There's also companies, for example, in the loan servicing space, which I think are going to present some really interesting investment opportunities. So the thing to remember is like that loan servicing companies, they generate a lot of revenue from foreclosures. That they tend to make a good amount of money in the foreclosure process. So I think that if we see the economic trend really, looking, moving downward, and that rate accelerates, I would be positioning myself in companies like that. I think there could also be opportunities in things like mortgage notes, because I think that as people will start to miss payments, especially people who are on adjustable rate mortgages, there'll be some interesting opportunities to, if you own that note, and foreclose, and then, kind of the value you can get on that. So there's going to be a lot of interesting areas. So I think that while there's a lot of concerns on the horizon, and there's a lot of economic forces, I think the key, and this is the premise of the fund we're going to be creating, we're looking at, what is really going to be happening, and how do we position, and what are the other types of asset classes that we want to be in, so that even when things go down, how do we go up? There's like, if you're in the stock market, there's things like, ETFs, such as like inverse funds. I recommended a lot of those to my friends over the last few years, which are going to be interesting. I think that we're looking also at bigger problems with OPEC. I mean, basically, we've had a silent war by and large with OPEC, not just the US, but also the EU over the last several years, and that's really coming to right. So I think in the short term, we're going to see some volatility in the oil and natural gas markets. So I think there could be some opportunities. I would imagine, they're going to probably do some more production cuts here and there to kind of flex their muscle and try to really show, hey, you guys can't get rid of us that easily, because it's still going to take 4 or 5 years till we have any meaningful adjustments in our infrastructure for energy, shifting away from fossil fuels to more renewables. And they're not building any new nuclear power plants, that many coming online anytime soon, which and those take a long time to bring online. So
yeah, at least the old school. I have hope for the newer versions, the light ones. But so, all right, man, we'll probably wrap it up there. I mean, like you said, they're just the things we could talk about is vast and deep and extensive here, but what we've covered has been super helpful, very knowledgeable. I like the fact, just probably my bias as a real estate guy, we talked about some particulars there. I think the recommendation is like you see there's opportunity if you spend time. This kind of reflects your thinking throughout your own philosophy of thinking and considering the different forces in the market around the world, being careful, and then playing the game accordingly, playing the investing, that whole type of thing accordingly from what you see after careful analysis. So it doesn't have, like you said, you could just focus in some area, like you said, the mortgage and rates and all this stuff. There's lots of different areas. So it's not the end of the world, but it is a new set of conditions, a new set of dynamics. And you just got to be talking to smart people like yourself and listening to podcasts like this to have awareness, and of course, study these things for yourself. So what's the best way for people to get in contact with you, Johan? If you have a website or newsletter or anything like that.
Yeah, sure. Like you could probably find me on LinkedIn, Johan Huber hyphen Gutierrez, or you could probably ping me on my Linktree. So if you go to Linktree, so it's linktr.ee/techyo, TECHYO.
Yeah, I'll put it, and I'll be sure to
Yeah,
put that contact in the
yeah,
podcast notes. People can click through that
yeah,
and find those good connections there.
yeah. And I'll just leave one last thing for you to chew on too.
Please. Yeah.
Is look overseas. Depend. It's going to be important. What's your time? What are your investment goals and horizons? What I would tell you is read up on a company, well, a fund called Ripplewood, and what they did in Japan after the bubble burst. I studied in Japan, lived in Japan, did business in Japan. I think we're seeing a new opportunity there. So if you have a longer investment horizon, I would say that with the dollar so strong and the yen really going back to some historical lows against the dollar, and that's going to help Japanese exports, but also opportunities in real estate, and with Japan opening up in Japanese tourism. I would say that this is an area that I'm looking at very deeply, and it's an area that we're thinking about setting up a fund that's really focused. We're also looking at setting up a Japan-focused fund, because I have a vast network there at all levels in Japan. I think there's going to be markets like that where if you can wait, 3-4 years, 5 years, I think that you can see some really wonderful returns, because your dollar is going to go so far, and as currencies kind of, once they start to kind of normalize and revert, you're not only going to get the return from that investment, but you're also going to get a return in terms of the appreciation in the exchange on the forex side of it as well. So
awesome, man. So that's an awesome nugget, and that's a golden nugget, and we'll leave it there just to have a nice piece of positivity and another great piece of advice for the audience. So everyone here at the Investing Aficionado podcast, I thank you. Appreciate your listening and your continual support of the program. Give me a like, give the podcast a review. Always appreciate those honest reviews. So until next time, we can bring you more guests like Johan and others. So until next time, we'll see you and checking out.
thank you.